Good morning, good morning, good morning. Today, the 1st of August 2023, a beautiful Tuesday. Today, we are going to have discussions on two issues that is affecting the economy. As you rightly know, we are here to discuss business-related issues. Before we go into that, just let's have this short news. Those that made headlines within the last 24 hours. Just yesterday, President Bola Ahmed Tinubu has unveiled measures to cushion the effect of the economic downturn caused by the fuel subsidy removal in the country, telling Nigerians he understood the hardship and came to help, not to hurt them. That was according to Mr. President Bola Ahmed Tinubu. He, however, approved 100 billion naira for the procurement of 3,000 20-seater buses fueled by compressed natural gas CNG to ease the high cost of transportation caused by the fuel subsidy removal. The president also said his administration will energize micro, small and medium-sized enterprises and the informal sector as drivers of the growth by 125 billion naira. Yesterday, Mr. President told us that within the last 100 days, the administration has been able to recoup close 1 trillion naira. And this morning, the president said they're going to use part of it to cushion this economic hardship, palliatives in some sectors, and which everybody is already having different issues on it. We're still going to discuss on that. In spite of these President Bola Ahmed Tinubu's promises to cushion the effects of the economic hardship on Nigerian, the organized labor, as the NFC, has insisted on going ahead with its planned protest over the removal of petroleum subsidy. Rising from another round of meeting of the steering committee on palliatives at the presidential villa Abuja, the union also expressed doubt about President Tinubu's ability to control inflation and gasoline prices due to the fictions of the exchange rate. The president of the Nigerian Labour Congress, Joe Ajaero, said the plan for workers to proceed on a peaceful protest from Wednesday has not changed. Wednesday is less than 24 hours. We are all waiting. We hope that by 12 o'clock, when the meeting will be convened again today, there will be good news after that meeting. Now, today's issue, there are different things that have been going on in the Nigerian economy. Last week, the Central Bank of Nigeria Monetary Policy Committee held their meeting under the new leadership of the acting CBN governor, that's Mr. Shonobi. And the CBN monetary policy, came up with a rise in the benchmark of interest rate by 25 basis points. That's to 18.75% from 18.50%. The highest rate since MPR was adopted in 2006. Its implication to manufacturing sector, that is what we are going to discuss. And I have in the studio with me to do justice to this issue, the Director General of MAN, Manufacturers Association of Nigeria, Dr. Segun Ajayi Kadri, MNI. Good morning, sir.
Good morning, and happy to be here as well.
And happy new month, sir.
Thank you.
Yes, sir. Now, how do you receive the news when CBN announced the upward review of the interest rate from 18.5 to 18.75?
Okay, I must be frank with you. The news came to us with a lot of surprises because we didn't imagine that, given the operating environment, and Nigerians are well aware that we had the removal of fuel subsidy. We equally had the floating of the rate of the naira. So this has led to increased cost of production. So we had felt that the CBN would consider not adding the credit angle to the challenge. Because what this means is that the rate at which we are going to borrow is going to be higher. And of course, you know the implications of all of those. So to answer your question directly, the news came as a surprise to us, but it has followed a trend that the CBN Monetary Policy Committee has followed over in recent times.
What were your expectations when the meeting was going on Monday before the announcement came up on Tuesday?
Well, like I said, we had expected that in the least they should retain the rates so that it will send the right signals that the CBN is actually interested in ensuring that the rate at which the productive sector, and in particular manufacturing sector, borrows is low and reasonable. We have always advocated for a single digit interest rate, but the lending rate as we speak has moved away from 26% to something like 28%. So you can imagine giving that to a manufacturer is not going to make him profitable or competitive.
In overall now, Nigeria is one of the countries that are operating 2 digits, and we've been clamoring for single digits. Do you see this coming very soon?
No, not with the trend that we have witnessed over a long period of time with the CBN. We have also not seen an expansion in the special purpose vehicles, what many call development banks. We've not seen an expansion in their capacity to be able to give loans at reasonable rates. For instance, the Bank of Industry, which has played very well in ensuring that we have rates that are lower and more useful, that will enhance our competitiveness. We've not seen a reasonable expansion in their capacity to give loans. So following the trend, I don't see us achieving it, except there is a specific and deliberate policy of government to play in that direction.
Now, the industrialization of Nigerian economy and the cluster of SMEs, it has been another ways that the manufacturers are already advocating for. In your view, having cluster now with this present administration, do you see it working?
Yes, I think generally speaking, the current administration has tended to pick on quite a number of challenges that has impacted manufacturing and led to a worrisome depletion in its performance. So one of it would be to encourage and facilitate the creation of clusters where infrastructure challenges and where other binding constraints that has limited the performance of SMIs will be drawn down. So I think it's a welcome development. What is needed is putting action to the words. I mean, Nigeria, we have never been short of policy statements, intentions, and so on and so forth. But I think the time is now for us, because the manufacturing sector, small, medium, and large scale, is really bleeding from long period of neglect. So I think answering to the call of the SMI by creating clusters and assisting them to become more efficient operationally and in terms of cost, it's going to be helpful.
Okay, now let's look at President Bola Ahmed Tinubu's submission that the nation's economy is going through a tough patch and everyone is being hurt by it. What are your takes on the steps taken so far, or the proposal, to tackle some of the implementation or some of the immediate intervention that the president has promised yesterday?
Okay, in a way, the speech of Mr. President has tended to address some of the issues we have raised. That is not just enough for you to announce policy reforms. All over the world, policy reforms come with quite a number of maybe unintended consequences. And you will see that what has happened now is immediate increase in general costs, not only to business, but to individuals, households, and virtually all stakeholders in the economy. So the speech yesterday has taken the matter forward in a way. It has revealed to some extent the follow-up measures that will be taken to address some of the challenges that it has raised. So I think to a larger extent, funding productivity has always remained a priority. And when you have a hardship like that, reflating the economy would be a necessary next step. So I think to a large extent, what has been promised has tended to give at least an indication and a good first step as to what is to come following the reforms.
The federal government yesterday said that they are ready to strengthen the manufacturing sector, increase its capacity to expand and create jobs. By this, it is ready to spend 75 billion naira between July 2023 and March 2024. Can we have the clip of Mr. President on that issue? Then we will now discuss on that when we come back.
We provide the necessary buffers and headroom to businesses in manufacturing sector to continue to thrive and expand. To strengthen the manufacturing sector, increase its capacity to expand and create good paying jobs, we are going to spend 75 billion between July 2023 and March 2024. Our objective is to fund minimum of 75 enterprises with great potential to kickstart a sustainable economic growth, accelerated structural transformation, and improved productivity. Each of these 75 manufacturing enterprises will be able to access
Yeah, very good. That was Mr. President Bola Ahmed Tinubu yesterday, telling the manufacturers that we are coming with 75 billion naira and 100 billion to SMEs. With this, do you see it as a good welcome?
Yes, I think it's a good first step. I mean, one is beginning to have a clue as to what the money saved. And thank God Mr. President said they have been able to save over 1 trillion.
1 trillion.
So one is beginning to have an idea of where that money will go to. So 75 billion, like I said, is a good first step. And it is going to a sector that is most deserving. The manufacturing sector over the years and all over the world have always been the vehicle for driving jobs, for increasing
the second largest employer of labor
in the country. So, I mean, putting money in that sector, it's a welcome development. Also, it is addressing one of the major challenges of manufacturers. Between 2021 and 2022, we have seen a reduction in the capacity utilization of manufacturers. It moved from 59% to 54% within that period. And chief among the issues that were raised are the lack of access to nullable funds and for a reasonable period of time. The interest rates have been very high. So this is going to, in a way, address the challenge for at least 74 industries and 75 industries. And there are quite a number that are deserving and in need. But this is a good first step. I believe that Mr. President will look at the impact this has had, and then will expand the bracket so that we'll be able to reach much more people. So access to credit, like I said, has been a challenge. So this is an indication that special windows need to be created, not at a time that the lending rate in the market now is about 22.80%. So you can see having this interest at no more than 9% is going to be a welcome development. We have said that apart from a single-digit interest rate, you are not helping a manufacturer.
And now, the president is also going to SMEs, who form the bulk of the informal sector, and now to revive that industry with 100 billion.
Yes.
Now, the question now is, how are you going to identify the SMEs that need this money urgently? Because if I have a production outfit having 5 or 6 employers, 100 person under one, what is the criteria you're going to use, or what do you think government should use in this area?
Okay, so of course we shouldn't forget that credit is not the only challenge that manufacturers have. There's multiplicity of taxes and levy, there's infrastructure challenge and so on. So, but because we are trying to see the impact of this, we just limit our analysis to it. So I think that it is very critical for government to ensure that the vehicle that will be used to deliver these credit facilities is carefully looked into. The president did mention that they were going to ensure that they have a well-structured approach to this allocation. And I saw that it mentioned development banks, commercial banks, and so on. I think there should be a lot of emphasis on giving it to development bank. If by that he means banks like BOI, I think that is very, very important. That will enable us to have the right criteria and give it to deserving industries. Of course, there are quite a number, millions of small and medium-scale industries, and even nano industries that you mentioned, nano enterprises. So, if you are able to get a creditable bank like the BOI, if you are able to have a transparent process, you'll be able to address those that are most in it, particularly if government prioritizes sectors, the ones that has the highest impact. So there has to be a lot of careful study. You know, government in the past, we have seen that the brain of government is not well thought out policies. You have not done a very in-depth analysis. You have not engaged the stakeholders. I mean, you have not done an analysis to know which one has higher multiple effects and so on. So I believe all that will have to be taken into consideration before you do the allocation. And that will help you to judge next steps to take. This announcement by Mr. President, I mean, is happening within the first 2 months and so on. So we can see a lot of those interventions happening. I believe that the outcome that they will see immediately over the next 8 months is going to inform that this is the right step to take, and then government will be encouraged to make more impact. And there are quite a number of challenges. We are just addressing them.
Now, before I let you go, what is your what would be your take home now? What should everybody take home from what we're discussing? We're talking about the interest rate, increase in interest rate, and talking about the Mr. President's palliatives. Now, the two are already on that economy. What should be the take home?
Well, it's just to say that there has to be an intentional approach to government policy. The monetary policy, as exemplified by the conduct of the Monetary Policy Committee, and the fiscal policy of government have to be in sync. You don't have an advantage in this one that is taken by the other. And all has to converge to encourage productivity so that you can have aggregate input increase. And also, Mr. President coming in with these measures should assure Nigerians that we need to focus on allowing the reforms to work, the people to support, and try to overcome the trust deficit that government has. But again, the ball stops on government's table. Government must follow up on its promises, and it must ensure that at every point in time, the stakeholders are engaged such that we will be able to sustain the trust, the confidence, and the hope that Nigerians have. It's a tough job to run a country like Nigeria, the biggest economy in Africa, but government has to demonstrate good faith so that the people will be able to trust and believe that the hardship that they are facing is temporary.
Thank you very much, sir, for coming. I've been speaking with the Director General of Manufacturers Association of Nigeria, Dr. Segun Ajayi Kadri, MNI, on the issues of interest rate increase and the palliative that the federal government has put in place to ensure that the economic hardship, is being cushioned. Now, we go for a short break. When I come back, we will have Kendi Adiaga, who's going to give us the stock market report, the trading on the floor yesterday, the performance of stocks, and what we should be expecting today. We'll be right back.